Hello and welcome to another episode of the Investing with IBD Podcast. It's Justin Nielsen here, your host, and we're coming to you live at 5 p.m. Eastern, as we always do on Wednesdays. It is May 21st, 2025, and I am pleased to welcome back to our show Charles Harris. He is a good friend of mine. Charles and I, for those that don't know, we used to sit right next to each other 25 years ago, a little bit more than that, maybe. So back in, I think you came downstairs. Was it at the end of '99?
It was the beginning of 2000.
Beginning of 2000. Okay.
Beginning of 2000, and for those first 6 months,
Yeah.
we were in next door cubicles.
Yeah, you and I were buddies, right next. Well, we're still buddies, but
Yeah.
of course, I was assistant to William O'Neill, the founder of Investors Business Daily, and Charles got brought down initially for special projects, but he was on the portfolio manager track. So, very shortly after he moved down, he was running money for William O'Neill, and he did that for, well, gosh, we've been doing it since 2000 as a portfolio manager, now senior vice president at O'Neill Global Advisors, and involved with a lot of projects. I remember one of the first projects that you and I worked on was, do you remember this, Charles? What was the first project that you and I worked on?
Remind me.
IBD 50. So,
Okay. Yeah. Yeah.
oh
Yeah.
yeah, and and
Totally remember
and
that. Yeah.
and, and let me see if you remember what was the one stock that Bill said, "Oh, you guys did not do a good job."
Oh, it was that oil company, wasn't it?
Amaretta Hess.
Yeah.
So Charles and I, of course, were doing, our first pass at the IBD 50. Actually, it was the IBD 100 at the time, and we come up with the stocks that are holding up the best in what was a terrible bear market after the dot-com crash. And Amaretta Hess is one of the stocks, and he's like, "You're telling me you think Amaretta Hess is one of the top 100 companies in the U.S.?" And
That's
he threw
funny.
us out of his
Yeah.
office.
I
So,
think after that, he replaced me with Mike Webster.
right. But you spent years sharing an office with Bill O'Neill and Mike Webster.
Yeah.
And again, you learned a lot from that. One of the things that I think we both learned from Bill was using precedents in kind of helping guide you for your decision making. And again, for those that don't know, Charles has notebook upon notebook of all of these past winners, losers, how to
Yeah.
handle them with some very detailed notes, and you pull them out like, oh, here's pullbacks to the 10-day and bounces, and you
Yeah.
can pull out and just take a look at a lot of those.
See
You
that
and
door
Mike,
behind me? I can
uh-huh.
pull out a file, and I've got, yeah, they're all notebooks.
Yeah, and then of course, you and Mike Webster worked on Chart School, which kind of gave people a lot of these precedents for themselves. You want to look at cup with handles? Here's the cup with handles. We also, you, Mike, and I worked on the Market School rules, which turned into a beast of a project, but really some great stuff came out of that. So again, it's great having you on the show, and let's get right into it. Let's talk a little bit about how you come up with you've been using precedents for a long time, and sure, I get it. Now that you've got 25 30 years of experience trading in the market, you've got a lot of knowledge to pull from. But when you first started, how did you go about like figuring out precedents and like, hey, here's something, how do you find those things to look at from the past to help guide your decisions for the future?
I think that, well, for one thing, when all you're doing all day is looking at charts,
Mm-hmm.
you you build a memory for certain charts, particularly stocks that you traded, or if you use a precedent. Like once you use a precedent, you have a tendency to always go back to those same precedents. So
For good or for for
for
ill?
better or worse, yeah. But I mean, normally what I'll do is I'll look for a market precedent
Mm-hmm.
and then go back and look for the winners during that time frame and use those winners as kind of a model for what I might expect in the current market.
Mm-hmm.
So for example, I'm using 1998 as a bit of a market precedent for what we just experienced in the first quarter with that really significant downdraft. Not exactly the same, I know that you've, I'm sure, spoken about it on IBD Live, but um, it it was looking very similar to this, except there was no retest of that second leg down this time around, whereas in 98 you did have that retest.
Yeah, so in 98, I'm pulling it up on the chart here for those
Yeah.
that maybe are listening to this, which again, you can listen to this podcast on your platform of choice, whether it's Apple, Spotify, what have you. We're going live on YouTube right now. But yeah, I was kind of looking at this. There was this test of the 50-day moving average line back in August of 98. Then, of course, you had another leg down here in September. And then it really got ugly as long-term capital management needed the bailout, and that was the ultimate low in October. Of course, I've shared that this was when I was first starting to trade, and there was this follow-through day right here in September, and I went very heavy with my whole $3,000 or whatever I had at the time. It touched the 200-day moving average line, then it came down again, and then there was this follow-through day right here in October. And I'm like, oh, you're not going to fool me again. So I waited, and then this thing was off to the races.
Yeah,
So,
yeah, it was incredibly powerful. I mean, back in this time frame, I wasn't working for Bill yet. I was still in the research department, but I was trading my own personal account, and um, I think I lost like 3/4 of my money, or at least 2/3 of my money, in that 3-month
mhm,
correction. I mean, I had no, all I had done was for the previous year and a half was just make money, like a lot, And again, and I also started with like $3,000. You know what I mean? But yeah,
right.
that was like my first experience of a bear market, and I didn't know anything about this stuff. I mean, I was like, yeah, I can trade this. I'm pretty smart.
Mm,
Yeah, I've been right for literally a year and a half. Everything went right, and yeah, you can get really hurt in a bear market, and that's one thing that. And I still tend to get hurt in corrections because I'm always give the market kind of the benefit of the doubt. And it takes
mhm,
me, like, I'm usually the last person to say, yeah, you know what, the market really doesn't look good.
mhm.
And I have to say that Marcus School did an amazing job of sidestepping the correction
Yeah.
this time around. I mean, it was like literally right near the top, like the first break of the 50.
Mhm.
And I like usual, overstayed my welcome. It's kind of like you. The benefit of giving the market the benefit of the doubt is that most of the time the market is trending up, and the corrections are mild and normal, and maybe a whatever 5, 6, 7% correction, you don't get shaken out.
Mhm.
But the downfall is if you actually are correcting and going into some kind of bear market or intermediate correction, you can get killed, and lose way too much off the top. So you kind of have to treat every beginning of every correction as this might turn into something much worse. And
Right.
that's not my strength. Like, I'm usually a little bit slow to react. So
It's the optimist in you, right?
it is.
Yeah.
And I guess if I could say, like, if I've learned a few lessons over these past few years is, don't be so overconfident, and don't just trade. Be less extreme, a little bit more moderate on how I approach the market.
Mhm. So,
So
so well, getting
yeah,
back to this precedent. So, okay, so you're looking at 1998, and it had this move up, where it hit the 200-day moving average line, reversed, and had that another test. And then I'm just going to switch us back to the current market. Um,
sure.
so, I guess you could kind of look at this as maybe that 200-day test if you kind of shifted everything over. Personally, I think a lot of us were looking at this as potentially being the test, and we're
Yeah,
expecting maybe another leg down and undercutting this. But
and
once
I
we
and
got
I
back,
was as well. I
yeah,
was as
one,
well expecting some resistance around that point, but we didn't get it.
yeah. I mean, we got a lot of power. It should be mentioned that again, we did have our follow through day right here on April 22nd. As a
Mhm.
reminder, we start with a rally day, and that was here on the Nasdaq. We had a lot of volatility between the Liberation Day on April 2nd, the pause in tariffs, and a lot of back and forth there. And then here we are, April 22nd. We have the follow through day, and it really, we just kept on clicking off the hurdles. So first it got above the 21-day moving average line, and then it got above the 50-day moving average line. And I know one of the things that you kind of pounded the table on about market school is that you really getting above the 50-day moving average line wasn't enough necessarily for you. You also want to see the 50-day in an uptrend, which we
Yeah.
saw just as this was getting above the 200-day moving average line. So do you still kind of hold that 98 precedent in your mind and just kind of say, oh, it shifted a little bit, and this is more like October now, or are you, or do you throw the 98 out and say, oh, this is something else?
No, I'm still using 98, even though, we didn't, either you could shift it or you can say it just didn't have a second undercut.
Hmm.
Or maybe you say that this, the pullback after the bottom was, an attempted test of, the lows. But I'm still using it just because I like, this was a time frame of, the internet explosion,
Right.
and it kind of coincides with a new secular theme in the AI explosion and database centers and all the derivatives. And so I feel like we're in like a new technological revolution at this moment, which 20 what is this 20 years ago we were in a similar, more almost what
One,
almost
yeah.
30 years ago we had a similar thing with the internet. Um, so just kind of it feels that like enthusiasm in the market. It feels very similar. I mean, we were trading at this time. So, and that's one of the benefits of having done this for a long period of time is, you see these similarities occur,
Hmm.
over the
Well, and
decades.
I think it's interesting that you point out this pullback here, and you might look at this as kind of an element of strength. And I'm talking about the pullback that happened after the huge, 12% day that we had on April 9th. And then you pulled back for about a week and a half.
Yeah,
And maybe this is an element of how strong the market was that it didn't undercut. And I'm going to go back to 1999 just as an example, because I remember, of course, when I first started working for Bill, it was September of '99. He had just had Charles Schwab as a phenomenal trade that he had. AOL and Schwab were two of his big winners in October of '98 that he picked up,
yeah,
and um, 400% in 6 months on both of them. And
yeah,
one of the things he pointed out to me, because when I was initially looking at Charles Schwab, I'm like, what kind of ugly pattern is this? He kept
yeah,
on calling it a cup with handle, and I'm like, the handle was so deep, 27% deep in the handle. I'm like, how is that a handle? And he's like, well, but look, it didn't undercut, and compared to the market that did undercut, Charles
yeah,
Schwab was showing relative strength, and that was
yeah,
a big thing for him.
yeah. No, and I was looking for, in the current market, very few stocks, at least leaders that I've been looking at, didn't undercut with the market. A couple that did hold up on a relative basis a little better are Duolingo. That didn't undercut if you look at the current market.
Yeah,
And
here's the low in
yeah,
March, and yeah, stayed above that entire time.
right. And KTOS, which is in the defense area, it's another example. I don't know what was going to turn out with these, but I'm not trading either of them,
Hmm.
at least not yet. But yeah, I think that's one important element to look at. And I was actually looking at Schwab. Of course, that is stuck in my brain because that was one of Bill's biggest winners during that time frame, and he just killed it. And Schwab was really, I think, the first stock to break out on the follow through
On the
day. It
follow through day.
actually hit a
Yes.
new high on that August 15th.
So you're talking about
I mean,
back
October
in '98.
15th. Yeah, October 15th
Okay.
of 98.
Whoop.
You're 99.
There we go. So here you got the high on July 20th,
Right.
98 at 46. You come down to the low September 1st, 98. Again, a pretty deep cup at 40%.
Yeah.
And then, as you mentioned, there was another high here in Schwab in September, at the end of September, that formed the handle, and then the low October 8th. I believe the follow through day was right in here,
It was
and
on
that's
the
where Bill.
15th. So I think you cleared the handle on actually on the 15th.
Yeah, so it popped up above it, had a final shakeout, and then closed above that handle on the 15th.
Right.
Yeah.
So I was looking at so I was kind of using so you asked me how I find precedents. So, using 98 as a market precedent, just given the technicals of the market and the fact that we're both in kind of a technology revolution, internet versus AI. I looked for the stocks in the market that were the first to break out, and this time around, the first to break out was Netflix.
Yeah.
So if you pull Netflix up on just the current market on April 22nd, which was the follow-through day,
Mm-hmm.
it broke out. So now this one did undercut, but it was pretty mild. I mean, if you look at
And
this,
I do have a position in. I just have to disclose I do have a
oh,
position in Netflix.
oh,
So.
good for you, Justin. You can take me out to dinner.
I got in a little later, but yeah, yeah, I still have it.
Yeah, and it's trending beautifully. And one of the things that I use these precedents for is to see, one, what's their potential? Like how high can they move up? And of course, this time frame in the market in the late 90s was we've really never seen anything exactly quite like it, where things went up, they were insane. But we could see it again, with this whole AI, and we have in some respects, like just looking at like how powerful NVIDIA was.
Right.
There's a lot of stocks in the AI database area that have had incredible moves, and they can they can repeat or have them again. So I mean, I have a position in NVIDIA currently. And so when I look at these stocks in the 98 time period, the precedents I'm looking at, they all respected mostly the 10-day moving average, and sometimes you would get a breach and the 21-day moving average would be support. But if you look at Schwab back in the 98-99 time period when Bill was trading it, the 21-day moving average contained the entire move all the way up to the climax top. So that's what I'm looking at now is, I want to see if the stocks that I'm currently trading respect, those moving averages. And if the precedent holds, then they should.
Right. So yeah, I'm gonna go ahead and pull up Schwab again, and the climax was in April of 1999. Very classic climax top. I remember Bill telling me, this looked climactic here, but it was too early. So he said, don't sell just because of that. But to your point, here's that 21-day moving average line, and it tested it a few times, but held.
It held, yeah. And in fact,
Now you also, I think. Oh, go ahead.
I was going to say that even the market, the Nasdaq also held the 21-day moving average for a long period of time. Definitely it got
Hmm.
you out of kind of the, into new highs and, for the first major part of the run. So, um, and that's a big part of market school too, right? Is the 21-day moving
Yeah,
average.
when you're trending above it, and of course, one of the things we also came up with in market school was the idea of the power trend, where you have your 21-day moving average line trending above a 50-day moving average line that is in an uptrend, and that, and you're trending with the lows above the 21 day. That kind of tells you, hey, you're in kind of a special market environment, and if that can hold, you want to treat it differently.
Right.
Hmm. So let's talk a little bit more about some other precedents as well, because I know another one
Sure.
that you sometimes refer to is, or did you have any others from this time period that you wanted to kind of look at? I think
Yeah, for
eBay was another one.
the 98 time period. Yeah. So the next one, so I kind of put them in categories. So the Schwab was the first to break out, and the
Hmm.
corollary would be Netflix, which was the first to break out. And
Right.
then um, another one I was looking at was Cisco. So Cisco at this time was like, huge winner in the market.
Yeah.
For the, it was probably the biggest stock of the 90s, for its entire run.
And yeah, just as a
And
reminder, it was about 75,000% from
yeah,
its breakout of a double bottom in 1990 to its top in 2000. But yeah, this is the Cisco chart. But yeah, go ahead.
and so if you look at the chart, you can see you had the first, like the pullback, and then that ledge, and then the second um, low was much worse than the market in a sense. Like the
Hmm.
market tested the low and had a slight undercut. This was a more dramatic undercut than the Nasdaq. Like if you pull the Nasdaq up, that second low was, you were
Hmm.
lower for a day. The Cisco chart is more dramatic than that on that second low. So
Yeah, like a full
so
full 2 weeks below that low.
yeah, and it was just this, percentage wise was quite a bit worse. So if you look at Cisco today, it's a very similar look. And believe it or not, I actually own Cisco today. I don't think I've owned it since the 90s.
Since 2000.
But I recently bought it as this, I think is forming this handle, and same kind of thing. You had that dramatic undercut, um, and it's come back up and it's forming something. And uh, Cisco's been a dead stock for 25 years.
Yeah.
You pull up a monthly. It's
And I'm just going to zoom out a little bit. It
yeah,
still hasn't gotten back up to its, if I remember correctly, its March peak here was 82
yeah,
right here, if I remember correct. Yeah, 82. Still hasn't gotten there. And I mean, look, Microsoft did the same thing. It took a long time for it
Microsoft.
to recover, but it finally did because of cloud computing.
Yeah, and so I'm kind of comparing Cisco to maybe Microsoft or even Oracle, which both had these long, decade plus consolidations after the craziness of the late 90s, but finally came out of it and, resumed their uptrends. Cisco's yet to do it, but, they are still, their last report is that their AI data center components are, you know, um, are stronger than they were. So they still have that. They're still kind of levered to this AI theme.
Mm-hmm.
Internet, they were all backbone of the internet. Now they're, I think, have a possibility of being involved in the AI theme. And if you look at ANET, which is probably the leader in that category, um, in networking and in data center, Cisco seems to be, just like on an RS basis, a little stronger at the moment. So I don't know, maybe they're going to take a little share, maybe it'll turn into something. I don't think it'll be as exciting, Cisco being kind of it's not the new IPO anymore.
Yeah, right.
Yeah, I'm not looking at it to be as exciting as a newer company, but um, I want to see if it works.
Mm-hmm.
you know, maybe it catches up and something happens, and if it can do what Microsoft did or Oracle, it could be a strong stock, and it's not that. So I think a way to kind of put it in your portfolio so you don't have everything, the wild stocks with all the heat. So I don't expect this to move nearly as quick, but we'll see if it can come out of here. So basically I'm using Cisco as a precedent for Cisco. And also using Microsoft and Oracle a bit as long-term stocks that were winners in the 90s that resume their uptrends in the last 5 or 6 years. Want to do another one? Oh, I can't hear you. Are you muted?
Oh, you know what? I did mute myself. I coughed and forgot to unmute
Okay.
myself. Yeah. So what else? What else you got?
Okay, so go to eBay.
Back in '99.
Back in '99. So eBay was a new issue, and again, this is the hot internet stock riding this whole internet wave, and on the follow-through day, which was again October 15th, it was just coming off the lows of this little kind of IPO base that it was forming. It kind of looks like a little cup. If you go back a few months and get a little bit closer to the base, there we go. Mm-hmm. So kind of built this little 2-3 week cup, and it was just coming off the lows on the follow through. And if you compare that to today's core weave, it's strikingly similar. So again, formed a little cup. It was a little bit longer than the eBay, but kind of on the follow through day was again just coming off the bottom, and once it broke out, it hasn't looked back.
Right.
And I hesitated on this one. I didn't buy it, and now I'm regretting it. Super powerful.
Yeah, I think I bought it in here as it was coming out of this, and then when it closed at the lows of that day, I lost my nerve.
Wow.
Yeah. So shame on me.
I think I think eBay is could be a good precedent for this one. Mm-hmm. Of course, eBay, really was a rocket ship.
Right.
In the late 90s. I mean, I think it quadrupled or something in a really short time.
Yeah.
But,
and of course,
who knows?
Not only that, but after it had that phenomenal IPO, this was one of the big winners that Bill had in 2003. Here again, it was one of those, as ugly as things were in in 2002. I'm going to go back actually a little bit more. He was starting to buy this in 2002 when the market had bottomed, but was still kind of doing a lot of retracing, a lot of back and filling.
Yeah.
But eBay was already kind of on the move
Yeah,
back
that
then.
was another great. Bill really had this uncanny sense for finding the leader. he
Okay.
just he just was amazing.
Did you have another one, or I also want to make sure we gave ourselves some time for Apple and Tesla.
Yeah, I have one more.
Okay.
So Microsoft back in the '98 time period.
Let's go to Microsoft.
And basically, I kind of look at this one as this is one that just the correction was again it followed the pattern of the Nasdaq. It wasn't the first to again. This is a long-term leader at this point. This was a very established company, and kind of I use this to inform me that you don't have to be the first one out of the gate to make money in the market. It didn't. It took another month and a half before it actually broke out, and it formed these kind of two little handles in a way.
Right.
And all in all, the correction wasn't nearly as deep as a lot of the other companies during this time frame. And if you compare that to CrowdStrike today, which I do have a position in. Again, it also, you had a slight undercut similar to Microsoft, and you kind of broke out of the kind of little double bottom with handle, and now it's forming another handle. So, right near the all-time high.
Mm-hmm.
So I think this can also be, another big winner in this time period. I think the cybersecurity area is particularly a good area to be in.
Right.
With all the AI and data centers and the need to protect your data. And I think that the leader at the moment is RBRK, which I don't have a position in, but I wish I did. I was just kind of been waiting for a pullback, and it just
The pullback that's never come. Yeah.
yeah, the pullback
This is a position on leaderboard, a full position, and it was one of those. I was going to buy it on the same day, but we have our restriction period, and then I got busy, and it went without me.
I mean, this is a perfect double bottom, and it's really powerful. So I think that this is, in any like a pullback to the 21 day, I would take a stab at it if I could.
Now, you kind of mentioned the CrowdStrike example, but then you're also talking about this one being stronger. So how do you make that decision? Would you go for CrowdStrike just because it gives you the opportunity, or do you say, no, I'm going to be patient and I'm going to wait for the chance in Rubrik?
I think they're both. I like CrowdStrike is a stock I have more experience with personally. It's a stock I've traded a lot more.
Right.
I think it's the actual leader. I think this is the stock leader. I mean, it's acting the most powerfully of all the cyber stocks.
Mm-hmm.
But CrowdStrike is more the kind of the fundamental leader.
Mm-hmm.
They're a much larger company, much more well established, and it's I think a little tamer than this. And I don't mind having kind of a more tame stock in my portfolio. So, I mean, if I had, I would even own both of these if I could. In fact, I did have a position in CYBR, CyberArk, which I sold today because it just kind of feels a bit like a laggard compared to those other two.
Right.
But yeah, I'm not averse to owning two stocks in the same category. Rubrik would be.
Bill O'Neill used to do that all the time, right? And then he would kind of let the market decide which one was the leader, and If he needed to, he'd put more money into the one that was working
Yeah,
best.
yeah.
Hmm.
In fact, that's what I actually sold this and added to my CrowdStrike today.
Hmm. Yeah, makes sense.
Um,
Let's go ahead and shift gears. Let's talk a little bit about Apple, and I'm going to go back. So this is a different time frame we're going to look at for Apple, um, because I want to go back to a trade that you did, and I remember because I used to put together a lot of your presentations and stuff, and I remember you having a great kind of time talking about how Apple in this correction. This consolidation here. I mean, this is the right one, isn't it? Or was it the
yeah, that's it.
2006?
No. You have the right one.
Yeah. Okay. I'm just gonna go forward a little bit so people can see kind of what happened. Um, you know, there was this double bottom, and I'll be honest. For as much money as Bill made on Apple, he said it was done here. He's like, yeah, I think we got what we could out of this one, and it's done. But of course, the great thing about Bill is he would change his mind and
Yeah,
say, well, forget what I said 2 weeks ago. Now I'm all in on Apple.
right.
But what was this the one, the period of time?
Yeah, that was the one where, if you recall, I remember I did a workshop and I was talking, like that's the one I was loaded up with options
Uh-huh.
going into earnings. If you pull up the daily of that of that time frame, and when it on that big gap down,
Right in here.
those are yeah, there, where, yeah, that was my options going worthless.
Uh-huh.
So yeah, I kind of had a huge bet going into this, and yeah, I got hit pretty hard. But I also, at the time owned it in the firm, and I held my position through the space just because I had so much conviction, and I had been done so well with the stock. Just in the prior 6-7 months, we were up. I was up enormously on it. And I remember Bill, literally, we'd have a conversation every day, and every conversation was like, why do you own this? It doesn't look very good. And I said, well, I could sell it. And he goes, no, you do what you want.
Uh-huh.
And I ended up holding it, and it ended up working out fine. And the stock, formed this cup with handle and then went on to double again. But I think the lesson here is when you decide to hold through a base, one, it requires an incredible amount of patience and conviction, and you have to be right.
Mm-hmm.
I mean, you don't know that you're going to be right until hindsight. You're always dealing with uncertainty in the market. So I think, the lesson was, not that I've been abiding by this lesson very well, but given that I've held Tesla now for 4 or 5 years without doing anything really, is if you sell when the tentacles are breached, you have an opportunity to get into something else. So during this time frame when Apple was basing, if you pull Google up, it was, as Apple started to correct, Google was starting a big run.
Mm-hmm.
So, I could have deployed my capital elsewhere and then come back to Apple when the base was formed.
Mm-hmm.
And, avoided all that heartache and, and all that stress of holding through, a base. And so, when Tesla went on that 3-year.
Well, and I just want to add that one of the things that you kind of hammered home in the presentation was that you were saying that this kind of took a few years off your life,
Yeah,
the stress and everything. And
yeah,
would you say that that's partially having to do with position size? Does it make sense to? I mean, it's one thing to hold through a base, but holding through with size now, I don't know, because you always have to have in the back of your mind, what if you're wrong? And if you've got that kind
yeah.
of size.
That's so true, Justin. Yeah, position size is everything.
Mm-hmm.
And I think one of the lessons I've learned over the, even these past, 4 or 5 years is you don't have to be all or none. I mean,
Yeah.
I've always kind of traded extremes, and like if I believe in something, I'd have a enormous position, much more than 20 or 30%. I can go much higher than that, and so if you're wrong, you can really hurt yourself. So um, I remember back in this time frame with Apple, in my personal account, there's one point in here I had all my money in Apple, everything.
Mm-hmm.
And if I had held the whole thing during the entire run, it'd be worth like $70 million now.
Mm-hmm.
Um, but these, it's really not possible, I think, to do so when you've got that much money on the line, and if you're going through a deep base, you're gonna get hurt. And there's just no reason, to put yourself in that position. So,
And
uh,
look, as a reminder, we went through Cisco before, and even though it topped in 2000, it's not like Cisco was like a lot of these internet companies that went out of business. Cisco had a thriving business
yeah,
for the last 25 years. They've still been one of the leaders, in no uncertain terms, in a lot of different areas, but their stock just, never
right,
had that glory that it did.
totally. And that is the, we've been talking a lot about precedents today, and um, that's kind of another lesson that I've learned is that you don't want to put too much faith in a precedent. They might look the same, but they're not the same.
Mm-hmm.
And so you want to use them as a way of kind of measuring, is your current stock that you're trading, is it working? Is it holding to the precedent? And once it starts to, um, shift away from that history, you need to kind of give up on it and say, okay, it served its purpose up to now, and now it doesn't, it doesn't work, as opposed to just stick with it. I was using Apple as a precedent for Tesla, and um, and they're not the same thing. Apple never went through, well, once the Apple move began in 2004 or so, right?
Mm-hmm.
Um, and it went on this 20-year plus run. It never went through a period where it went on a 3-year consolidation. I
Yeah.
mean, Apple had some big corrections, but not like even the 2008 bear market. It didn't correct as much as Tesla did over the past few years. So, um, it just didn't work the same way.
Mm-hmm.
So you can't have like too much faith in a precedent. I mean, that said, I still have a large position in Tesla, um, particularly in my non-margin accounts, which I'm just holding. I haven't sold in, I guess it's been about 4 years.
Mm-hmm.
Since 2000. In 2020, I traded Tesla very, very actively, made a ton of money, and the tax bill was so extreme that I decided I'm going to really either shoot for long-term capital gains or just try to hold the stock. But I didn't know what I was in for. Like, I really didn't realize. And in my margin account, I really got killed
Right.
holding Tesla. So,
Well, and there again, I think you've shared, you've got some great YouTube videos, and some people actually mentioned this, that your YouTube videos on psychology and everything. I mean, a lot of it came down to position size again, right?
yeah,
It was getting overloaded in margin accounts, a very different situation than what you were dealing with in your non-margin accounts.
yeah, definitely. And yeah, and I mean, then that said, when Tesla hit its high back in late 2024, when it finally came out of that 3-year consolidation and hit a new high up close to 500, my those accounts where I held, where I wasn't on margin were at all time highs.
Hmm.
um, for the portion I was in with Tesla, but my margin account where I lost so much during that 3 year period because I just had too much and I wasn't selling, and I was forced to sell. Those are still nowhere near their highs.
Hmm.
So yeah, I think when you enter a bear market, regardless of the conviction you have in a stock or how well you've done, um, if you're gonna hold through a base or hold a long-term stock, you can't do it on margin. You just
Yeah.
can't. It's not bright. It's not. It's you put yourself in a position where you no longer have control,
Hmm.
where you can get called away, um, where you put too much pressure on yourself, where you can't handle the pressure. I mean, everyone has a breaking point. And the smartest way not to concede is just don't put yourself in that position to begin with.
Right.
So
And just to kind of wrap up our discussion here again, because I think this has been very useful, to kind of see how you use precedents, giving some examples. And I want to address one question from our live YouTube, station here. Someone was saying like, okay, checking old precedents is one thing, but how do you get that conviction that a stock could possibly make such big moves at the present? And I guess maybe this is a combination of how how much does it have to correlate, in terms of the strong fundamentals, the
yeah,
life changing technology that it might be providing, as well as the technical action.
yeah. So the precedents look the same, they're technically, but you can't really have a lot of conviction just based on a chart. And I always try to hit the point when I'm on IBD Live or various interviews is it really is the can slim part of it, the earnings and the
Hmm.
story and the profitability and if their moat that where they're the leader and can't be challenged easily. That's what really matters. And if you look at those precedents that we talked about in the late 90s, like the eBay and the Cisco and Microsoft, um, and Schwab at the time. I mean, those all had fundamentals,
Right.
and they all had the fundamental factors that Bill would insist on.
Hmm.
And so, yeah, you can't just base it on the chart and on the technicals. You can't have conviction that way. And I almost never will buy a stock just because of the chart.
Hmm.
Like I have to know what the company does. I have to understand it, at least understand it enough to know why it's special. I might not understand how it works, if
Right.
it's a tech stock or really get into the weeds, in that type of stuff. But if I know the problem they're addressing and why it's superior, then I can get behind that. Bill would um, Bill wouldn't know everything about the technology part of it, but he would know like this is special because it addresses this problem in a
Hmm.
better way than everyone else, or it helps the company save money in this way, or helps the company be more efficient, or it's just a new way of looking at something. I think the N in can slim is probably the most critical thing to look at, that just that story. And Bill would say, you should be able to explain why it's special in one or two sentences.
Yeah.
So that's good enough for me as well, but I do need to understand that, and in order to have conviction, you need to know why you're buying it. So
Hmm.
yeah, a chart alone is definitely not enough.
Hmm. Well, Charles, I really appreciate you coming on and sharing your knowledge in this regard. Because again, for people that don't know. You just have so much precedence study that you've already put in. And again, I think people need to realize that sometimes that means you've even traced out, okay, it did this for this many days, this percentage, then it did this, and so,
Oh yeah, I mean
yeah,
sometimes I would actually take the chart and like I'd have two charts up and I just line them up and look at
right.
them and see, how closely did it work. And I would say, some of my biggest trades have been based on good precedents that I've found. But where I've gone wrong in the past is sticking to it when they no longer work.
Yeah,
So you really need the kind of the discipline to admit that it served its purpose up to a point, and then and when it's no longer working, back away.
yeah.
Having too much hubris or overconfidence will kill you in the market over the long term. So
Yeah.
got to be careful with that.
Great place to end. Thank you so much, Charles. Really appreciate it. We'll get together soon. Congratulations on again how well your children are doing.
Oh yeah, thanks. Daughter just
Marriages in the works, and
yeah.
touring in a band. By the way, my daughter already had your son's the band in her playlist.
Oh, very
What was it? Biba Duba.
Biba Doobie.
Biba Doobie, yeah. So,
Yeah. So
yeah,
he's
my daughter
touring with
has
her.
some of her songs in a playlist. So it was awesome that your son was playing at Coachella. That's a big deal, and
Yeah, very.
congratulations on all that. It's awesome.
I appreciate it. Thanks, Joss.
Okay, and thanks for coming on.
All right, thanks for having me. Talk to you soon.
Absolutely. Okay, that's going to wrap it up for us this week. Please join us next week. Speaking of a music aficionado, we're going to have Joe Fahmy on. He just knows so many music people, people in the industry, and of course he knows markets. So it's going to be great to talk to Joe, get his thoughts on the market, and I'm sure we'll have some great lessons with his typical sense of humor that he brings to things. So please join us for that next week. We're going to be live at 5 p.m. Eastern, as we are every Wednesday. We'll see you then. Take care, everybody.